All right, thought we'd take a look at the Australian dollar today. This is the weekly chart of the Australian dollar. I'm going to try to go through this as quickly as I can. There's a lot of material to cover here. But as you can see here, this weekly chart, prices last made a significant weekly swing top right here, which is week ending January 26th. Now remember, when I talk about a weekly price chart such as this, each one of these price bars obviously represents 5 trading days from Monday through Friday for that week. But you're not going to assign every single date for that week to one price bar, so only one date could represent it. So I use Friday's date. That's how these bars are set up. So if I say, for example, this is week ending January 26th, that means Friday of that week is January 26th. This is not the day of January 26th for that price bar. That's a whole week right there. I have some time price squares tied into that. Notice here 90 degrees it shows here. So it's 90 degrees in time to here, 90 degrees in price to here. That would be 180, 270, and 360 and so forth in degrees. For those of you familiar with like Gann, square 9 and all that stuff, well, that's what we got going here. Okay, now just want to kind of give you a little back history here as prices were moving down. You'll notice that when price broke down below the first 90 degree square support level right here, it rallied up. You can see that it hit resistance. This internal resistance, this ascending resistance here, or another way we call this dynamic, because each day, or each week in this case, a weekly chart, each week the resistance value goes up. It's higher and higher, higher, while this resistance goes down, down, down. So this is an ascending resistance. And notice how it stopped price dead in its track here on week ending March 16th. But notice that it also coincided with the very top of this green zone. This is a 8-week overbought zone. You can see there's a 4-week, the darker area here is 4-week overbought zone, and this up here is a 16-week, a much longer term overbought zone. So the smaller, shorter term overbought zone found price move up, found resistance within it, came back down, tried actually again to go back in, was rebuffed and pushed back down again. You notice it found support as it was moving up, and then it shot and broke down below that. So normally what you want to see, and what you normally will see, is that when price is rebelled from the overbought, then it starts to head over to the oversold like a magnet. So I like to see prices start moving down into the oversold before it starts moving overall back up again of such a degree, such as you see here and here and here, for example, rather than just something minor as a little 1 or 2 week move up. I'd like to see something a little more substantial. So you like to see it move into oversold for moves like that. The other thing to note here is that we have these time diamonds shown here. These just plot where the current F-date forecast is for this market. The previous one is where we see price came down and rallied up. It made its turn right here. And what happens is that it indicated that we were going to have a reversal, and it did. It made a swing bottom right here, and it moved up. And of course, we already know that it hit resistance. Down here, because price is moving down, we are going to expect a weekly swing bottom to occur here. Well, right now is the time to start looking, because it could be 1 week early or 1 week late. This is right on time right here in the middle. That's where I'm going to introduce you to this indicator here, or actually this report called the seasonal data reports, found in this provisions charting application that I have here. And this is a very powerful report because it gives you a historical view as to what this market's tendency happens to be on the weekly chart. And you'll notice that the colors change from blue here to red over here, and it changes right at the 511 period right there. Now this week, which is this very week that we're trading right now, historically has often seen an actual peak or valley. As you can see, it says peak or valley right here. And now I just went ahead and messed everything up. Where's that 511 at here? We'll get it back. There we go. All right. So we got this going right here. You can see 5.4 often has produced a change. In other words, either a top or a bottom like that. You can notice it's the dark green. But the color changes happen right here at 511, which I put a lot more stock on historically. And so it coincides with this weekly F date, which is marked by the diamond. So I like the fact that I've got two indications here telling me the same exact thing. The other thing too, for those maybe not familiar with the time price squares, is that oftentimes you can see reversals occur at the end of the square, but half squares also is a good place to look, and it just happens to fall right in the middle of the square in time. So we got several indications here to look for a potential weekly swing bottom. And so we really definitely would like to see it get in this oversold zone, but it doesn't have to. Either case, we need to start looking for this downward trend here to find its support and start moving back up again. Now is the time because we have these indications. The indicators down here, you're pretty much your standard canned indicators. You got a percent R, you got stochastic, you got MACD, you got DMS, and you'll notice that in the percent R, for example, that it's already in its oversold. Often when you break out of an oversold, you start heading to the overbought. It broke out once here. You can see that's where the last weekly F date was. It called that pretty good, but it was a failure as far as that it just didn't have any It made it up to here. It bumped right into the overbought and just came plummeting back down again. But normally you like to see when you break out of this oversold, you just keep on going until you get to the overbought. You can see that the same thing happened over here, and then finally it just went up. Back here, same thing. Back here, same thing. So, and here was another one of those minor bumps. It broke out. It gave you this little rally up here, found resistance, moved back down. So that's how you use this little puppy here. Your stochastic's pretty much just a cycle oscillator. You just kind of follow the pattern, blue, blue, blue. And so clearly, if you look at the spacing of things, this is about ready to start turning up real soon here. Definitely the MACD histogram ready to do its thing and move up as well. So I like to find support. I like to see this happening sometime around next week to go along with this 511 that we see over here with the seasonal tendency report. It's also mid square. So that's how I see the Australian dollar in this analysis. Going to the daily real quick though, I'm just going to show you the daily here. You notice it's just coming off of the overbought zone here. It's heading to the oversold, and right here is the next F date for this market, for example, because this one here was an attempted rally. You can see this green bar. The market tried to reverse. It failed, but it was happening when we thought it would happen. But then it's coming down likely to here, hopefully down into this oversold zone. It's time for this indicator to break out of here. It's time for the MACD to start moving itself up. So this is next week. This is Monday of next week. Here's what that is, and that happens to be right in here, which happens to be right in here. So everything seems to be falling in line. I would start looking definitely at the Australian dollar next week, potentially putting in a weekly swing bottom, and then starting to look for opportunities to ride it up for at least 2 to 3 weeks at the very least. Okay, well that's it, and I'll see you in the next video. Bye.